To bookkeeping and accounting. In this chapter, we are going to cover the meaning, definition, and objectives, importance of bookkeeping, difference between bookkeeping and accountancy, meaning and definition of accountancy, basics of accounting system, qualitative characteristics of accounting information, basic accounting terminologies, accounting concepts, conventions and principles, accounting standards and IFRS. So your NCRT book is very nice. They have very conceptually explained each and every topic, and this is basically the chapter 1 is the theory chapter, in which basically a theory question or and fill in the blanks will be asked. Okay, so without wasting time, we'll start the chapter. Bookkeeping is related with recording of business transactions. This everyone knows. Okay, bookkeeping is related like this. And other organizations deal in activities which involve exchange of money or monies both. Okay, monies both. All these activities are recorded for the purpose of taking important decisions as to whether the activities are feasible, profitable, or and are to be continued or not. Okay, information about the business and other organizations is required not only by the proprietors and managers of business and other organizations, but also to various other stakeholders such as government, investors, customers, employees, and researchers. Have you visited a business shop? What do you observe there? Different types of businesses. I'll give three scenarios. Okay, first, a business, a vegetable vendor who is selling vegetables on the road. He gets the stock of vegetables from the farmer. He brings it to the market. He buys the stock of vegetables from the farmer. He sells it to the customer at a profit. Okay, if he has bought the 1 kg of onion at rupees 20, he sells it to the customer at 30 or 35 rupees per kg. Okay, depending on the demand and the quality, and it's whether its quality has deteriorated or it can it is of a good quality and can be retained even if it's not sold for 2-3 days at the same price. Okay, so here is getting the onion, is selling at a profit. He's getting onion, he's selling the, okay, he knows his profit. This is my profit, 10 rupees, and he's happy in this. Okay, and he this profit he with this help of this profit he is able to carry out his day-to-day activities, day-to-day needs. He is able to fulfill his day-to-day needs. Okay, second example I'll give you. He's a shopkeeper. He's a stationery shop. He has kept different types of books, different types of pens, different types of pencils. People, students come and they buy from him. He buys the all this material from the manufacturers and he sells to the customer. There are hundreds of customers comes to his shop. Okay, and he sells. The first situation I told that no, that person is not making any records of this. In second situation also I tell that he is not making any records. How much profit he made, how much loss he made, how much goods were deteriorated, how much goods were stolen from the stock. It also happens, no? And third situation, the manufacturer. He manufactures the stock of material. He procures raw materials from say, farmers, from different types of vendors. He manufactures a product and he sells it to different distributors, to different types of retailers, and he's able to make some profit. He has no. So in all these three situations, you can understand that he knows that he is making profit. As he is buying at 10 rupees, he is selling at 20. He is uh, buying at 20, he is selling at 20. Now in this he knows this is my 10 rupees profit per unit. But does he knows that how much total profit he is able to make from total quantity of materials which has been sold from his stock? No. This will only be possible when he makes a record of it. This record of the same is nothing but called bookkeeping. That is recording the day-to-day transactions in the books of accounts and making decisions how much profit he has made, how much loss he has made. There are only two profit only determines by purchase of goods or purchase of raw materials and purchase of sales of goods. There are other incidental expenses also which are incurred. Can you give me certain examples that these businessmen might be incurring for their business day to day? They might have hired certain people to carry out the day to day activities. So these day to day activities, to carry out these day to day activities, he needs certain people to carry out these activities. So he hires certain people for that. Okay. This is nothing but the salaries cost which he has to pay. Salaries, that is the payroll cost which he has to pay. In the first example, that person is vegetable vendor is selling on the road. Now to he's getting the material from the farmer. Okay, he's getting the material from the farmer. It might be two types of situations, that he has to go to the farmer and get the material, or the farmer would be coming to him and giving him the material. So what type of costs are also adding it with the raw materials? Can you tell me? The cost which are adding is nothing but the transportation cost. Yes. So in first type, so in second case, second case was the stationery shop. I give you the example of, I'm giving the example. Okay. So He will be needing a he's where he is keeping the materials. People are coming in his shop buying the goods. So what here cost will be has to bear? Can you tell me? The payroll cost, okay. And another, the electricity. It should be light, no? That people will come there. People can see the items which are displayed in a shop and they can buy it. So electricity charges. These are also the costs which are have to be added with that purchases which he has made from the manufacturers. These I'm giving small examples. I'm not giving. There are many types of examples which have to be added there. Okay. In third example, manufacturer. The manufacturing he is manufacturing certain types of products from the raw materials. So he might be having certain types of machines there. The machines are prone to wear and tear. Or if I had purchased the machinery in the year 2020 and I'm presently in the year 2025, will that machine be the same as it was in the year 2025? 2020? No, there might be some wear and tear which would have happened. It would be needing regular maintenance cost. So here emerges a new cost, that is repairs and maintenance of that machine, which has to be carried out regularly. Then for that big setup of that manufacturing unit, there is also to be ensured that there does not go any type of electricity costs are there. Then there is also a new type of cost which is emerging here, that is power and fuel. Okay, which type of cost is emerging? Power and fuel. Okay, so with these three types of examples, what you understand, if I'm basically keeping and getting that that three businesses, if they were not maintaining the books of accounts, what their mentality would be? Their mentality would be that I'm getting my sales are of 20, my purchases are of 10, my difference is 20 minus 10, that is 10 rupees per kg of onion. My sales are of 100 rupees, my purchases are of 50, my gross margin is of my assumed profit is, I'm assuming that I'm getting 20 rupees, 20% profit. I'm assuming that I'll get. But is it sufficient there? No. He's not able to understand if he's not making. When he is able to understand, when he makes proper books of accounts, he maintains proper books of accounts. That is how much sales he has made, how much different types of costs he has incurred to make that sale. So this before accounting, he has to maintain books of accounts. With the help of books of accounts, accounting will be done. So all these concepts were taught by our great people who felt that these were the problems which our businesses which were carried out at that time. People were very happy that they are gaining profit, but they are not knowing that actual profit how much they were gaining, because the books of accounts they were not maintaining. So there was an evolution of accounting. So we'll see that. In India, during Chandragupta Maurya regime, Minister Kautilya wrote a book named Arthashastra, wherein some references can be traced. These are important. These can be asked for your for your fill in the blanks. Okay. Shastra. Chandragupta Maurya Reji Kautilya wrote a book named Shastra, wherein some references can be traced regarding the way of maintaining the accounting records. Okay. Afterwards, it was called Deshi Nama. You might have heard this word many times if you are very close to businesses. In the earlier time of civilization, accounting was done by agents who managed the properties of wealthy people. They prepared accounts periodically for the owners of property. The records of debit and credit was found in the 12th century itself. This is very important. Okay. In the year 1494, this is very important date, Luca de Bargo Pacioli, an Italian merchant, introduced the double entry bookkeeping system. Due to the Industrial Revolution in the 18th and 19th century, a large scale of operations were carried out on joint stock companies emerged as an important form of organization, which involved separation of ownership from management. Hence, to safeguard the interest of owners and investors, the business establishments required detailed information about businesses, which paved the way for development of comprehensive financial accounting information system. In the 20th century, the need for analysis of financial information for managerial decision-making caused emergence of management accounting as a separate branch of accounting. Though accounting was individual-centric in the initial stage of evolution of accounting, it has gradually developed into social responsibility accounting. This is due to the vast growth in business activities, development in various ways. So accounting has become inevitable in the modern world of business. Okay. So we saw bookkeeping of accounts. We basically understood who bookkeeping accounting, why it is important to understand your correct profit. But we saw that Arthashastra book was written. Okay. Who wrote the Arthashastra book? Chandragupta in the Chandragupta Maurya's regime. Kautilya wrote a book named Arthashastra regarding it has give this book gave references to the way of maintaining accounting records, which is also called as Deshi Nama. So you might have heard from your seen some people debit credit, or you might have not heard. It's okay. Be going into it in detail in further chapters. Okay. So also we did not saw what is double entry bookkeeping or system. So there's a concept in accounting which is called as double entry bookkeeping system. In 1494, Luca de Barco Pasili, an Indian merchant, introduced the double entry bookkeeping system. Now, what is this double entry bookkeeping system? In bookkeeping, we understood that recording of the transactions is very, very important. Okay. There are purchases, there are sales, there is purchases, there are sales, and the purchases, sales minus purchases is my profit. Okay. But this is a single entry system. There are purchases, there are sales, there is profit finish. But this was the end of bookkeeping. But in accounting, this is not only the scope of accounting. Scope of accounting is very wide. It also includes how the transactions are recorded in the books of accounts. Now, this person, this vegetable vendor, case one, he might be purchasing goods. He might be purchasing goods from farmers. Suppose he is purchasing 10,000 kgs of onion at the rate of say 50,000 rupees at one instance. In second instance, he might be purchasing 20,000 kgs of onions at the rate of 40,000 30,000. At the fourth instance, like this, in the full year, he might be purchasing around 5 lakh of kgs of onions and at the price of 50 lakhs rupees. So, is it necessary that he might be paying to the farmer immediately this full amount of 50 lakhs? He's purchasing a big amount. The answer is no. He might be paying at certain intervals of time. Like so, he has to pay 50 lakhs, so he might be paying each month around 10 lakhs rupees, sometimes 12 lakhs rupees, because he's giving him giving him he's his customer. He's a customer. Customer is God. So for him, customer is God. He's giving him money, and he's able to sell his stock at farmer. So he's satisfied. He's never going to. He's going to sell the all his stock in the market, and he give back his money. So he's not tense. But in this process, what problems can emerge? Is the full amount settled, or he is doing certain problems in it? Like he's not giving in certain 1 lakh rupees, 2 lakhs rupees. He's misappropriating it because no records are being maintained of how much money is being paid. Purchases are being recorded, sales are being recorded, but money is not recorded. Records of money is not recorded. In another case of stationery shop, he buys stationery from three manufacturers. He buys the stock of around 1 crore rupees from manufacturer A, 2 crores from manufacturer B, 3 crores from manufacturer C in the whole year. He is settling the amount each month, say 50,000, 1 lakh, 3,000 as the stock comes to him, or he pays in a fixed amount of money in as per the credit period allowed to him. Okay, so manufacturer has only this stationery shop which I'm mentioning in this example, or he has to sell the raw material to thousands. He's selling to thousands of manufacturers. So it's very difficult for him to reconcile to match the amounts which he has got with actual sales which that manufacturer is making. In the stationery shop example also, this stationery shop vendor is selling his the stock to many customers. Some are big customers, some are small customers. To some customers, he is providing credit period that you can pay me later after 10 days, after 1 month, as per the agreement between them. So with this, so whether he's getting this amount at full amount at the end of the credit period or not, these also has to be recorded in books of accounts, and this has to be settled completely. My purchases are 50 lakhs, I've received 50 lakhs. My purchases are 50 lakhs, my amount received to me is 50 lakhs from the customer. So my this transaction has been fully completed. So in the single entry system of bookkeeping, this was not covered. But in double entry bookkeeping system, this was resolved. And this double entry bookkeeping system was introduced by Luca de Barco Pacioli. Okay, he's a very important personality, and you will get a very important question on. Now, double entry bookkeeping system was fine. It was introduced. This was followed that one I'm selling it. That is one credit, and I'm receiving it. Receiving means debit. Okay? Receiving means debit, and giving. I'm selling, that is credit. Okay, I'm receiving, it's debit. I'm giving, it's credit. Okay, so double entry bookkeeping system we are going to see in the further chapters in very detail. Okay, with this, after double entry bookkeeping system records were properly maintained, people were able to understand the correct profits, they were able to settle the accounts smoothly, government was able to understand the correct revenue, they were able to understand how much profits actually the people are earning, and they were able to get the taxes on the other basis. Okay, so it also helped government to get proper tax amounts on this sales. Okay, but further, as growth happened, there were different types of accounting which have been developed, that is which you're going to see further in your different types of stages in your accounting subjects which you'll be studying in for the future years. That is social responsibility accounting and management accounting. I'll give one sentence, and we'll stop here with this session. Okay, the social responsibility accounting. What is social responsibility accounting? Is nothing but when you are manufacturing your goods. Okay, when you are selling the goods in your stationery shop, when you are selling vegetables and you're as a vegetable vendor, you are being provided resources. These resources are being provided by whom? By God, that is nature. So you have to respect it. So in this process, when you're carrying out these different types of activities, commercial activities, you might be certainly affecting the environment. Okay, of not affecting, in some way affecting also, and in some way you might be using the environment. Okay, so it is your duty that what efforts are you taking in it to ensure. This is a cost which has to be understood by you, and which has to be recorded in your books of accounts also. Management accounting. Now this I'm making a profit. Example, I'm making profit. The manufacturer is making profit of 10 lakhs per year, 10 crores per year. That stationery shop is making profit of 20 lakhs per year. That vegetable vendor is making profit of 5 lakhs per year. So is my am I satisfied? This 5 lakhs next year also I'm satisfied with this. But next year will I not aim that my this 5 lakhs should become 10 lakhs, this my 10 lakhs should become 15 lakhs, this my 10 crores should become 20 crores, this my 20 crores should become 30 crores. So you have to carry out. So so what, how you will achieve this target? You have to make certain decisions. So management accounting is an art of accounting which will help you in achieving your targets, which will give you proper analysis that how you can achieve this by analyzing the financial statements and actually taking decisions on that basis. Okay, so we'll stop here and we'll continue in the next session. Thank you.